Hello everyone. Welcome to INR Bonds RBI policy meeting update. I am Nikhil. In today's policy meeting update, RBI has kept the repo rate unchanged at 6.5%, and they have kept the stance also neutral. They said the price stability is more important than the growth stability, and given the price stability, that is inflation number, which was reported at higher than the targeted range, about 6% in the previous numbers. And whereas the GDP growth, which is at 5.4%, which they believe it was till the H1 of current financial year, the growth has bottomed out. And due to the higher sales in the festive season and the next quarter later, they expect the growth momentum to come back. Hence, they did not change any kind of rate cut and left the repo rate unchanged at 6.5%. However, coming to the liquidity front, they showed some concerns on liquidity and as well as they're trying to attract dollar investments, by which they have cut the currently to boost the domestic liquidity. They have cut the cash reserve ratio (CRR) by 50 basis in two tranches of 25 basis, and to tackle the tightened liquidity in the dollar front, they want to attract the dollar investments by increasing the FCNR deposit rates for 1 to 3 year, and the benchmark for that is SOrr, and for that it is ARR rate. The plus 400 basis points they have increased. Earlier it was ARR plus 200 basis points. And also RBI also mentioned that external commercial borrowings and non-resident investments inflows are at record highs compared to the previous year numbers. And coming to the economic indicators, high frequency numbers, the projections of CPI inflation is at 4.8%, where the Q3 projections are higher at 5.7%. And given the seasonality issues in the vegetable prices, they expect the food inflation to soften in this Q3 and Q4. And the GDP growth rate is revised to 6.6% from 7. Downward revised to 6.6% from 7.2%. Whereas in the Q4, they expect the GDP growth to bounce back to 7.2%. And along with that, RBI also wants to boost the interest rate derivative futures, for which, as a key measure, for which they're going to bring in a new benchmark, that is Secured Overnight Rupee Rate, where earlier it was called a call rate. It is unsecured. It is rate between two banks lending between each other. That's a very not a benchmark as such, but given this new benchmark introduction, it could help the TREPS market and as well as the overnight improve the pricing in the overnight market as well. Thank you for listening in, and do subscribe to our YouTube channel if you want to get timely updates on fixed income market. And also we have a monthly podcast which is done by Mr. Arjun Parth Sadhi. You can get to access podcast as well. Thank you.